Footage of grocery stores shelves, gas station price ticking down and headlines flashing. Inflation shows again. CPI data shows cooling trend. Economic outlook improves. Good news for your wallet. Good news for your wallet. Inflation in United States is showing signs of continued cooling. New data from the Consumer Price Index or CPI reveals that consumer price rose at a slower pace of the third straight month, offering some relief to households and fresh debate for policymakers. CPI report July 2025. Overall inflation plus 2.4% year over year. Core inflation, including food and energy, plus 2.7%. Gas, groceries, and rent see moderate price drops. The latest numbers shows overall inflation increasingly by 2.4% over the past year, nearing the Federal Reserve's 2% target. Core inflation, which strips out volatile and food energy prices, is also slowing, though still slightly elevated. Economists say that this is a strong signal that inflationary pressures are easing, supply chains have stabilized, wage growth is leveling off, and consumer demand is trending to normalize after several overheated years. Shoppers at the grocery store, small business owners, and renters. For everyday Americans, the impact is tangible. Grocery prices have finally stabilized, gas prices have ticked down, and rent increases, while still high, are slowing in major cities. What's driving the cooldown? Lower energy costs, slower wage growth, easing supply chain pressures, and the last, decline in consumer spending growth. The cooling trend is fueled by a combination of factors: declined global oil prices, steadier wage increases, and improved product supply chains, plus consumers spending in softening, reflecting caution in a still fragile economy. Federal Reserve press conference, Jerome Powell speaking. For the Federal Reserve, this data is pivotal. Chair Jerome Powell said that recently signaled that if the trend continues, interest rate cuts could be on the tables as early as September. Powell said that we are encouraged by the latest inflation data. If this progress holds, we will be in a position to ease policy to support continued growth. Wall Street rally, stock tickers rising, traders cheering. Markets reacted with optimism. Stocks surged following the CPI report as investors bet the rate cuts will soon lower borrowing costs for businesses and consumer alike. Democrats touting recovery, Republicans warning about long-term risk. The inflation cooldown is also fueling debate in Washington. Democrats credit recent legislation and Fed policy for stabilizing the economy, while Republicans argue that the long-term damage from previous inflation spikes still hurts middle-class families. GOP senators say that this slowdown is welcome, but let's not forget Americans are still paying more than they did 4 years ago. Timeline of inflation since 2020 with spikes and current decline highlighted. Indeed, while inflation is slowing, prices remain high compared to pre-pandemic levels. Many households are still adjusting to a new normal where affordability remains a concern, especially for housing, healthcare, and education. Busy city streets, people filling gas tanks, and freight filling and sunset. As inflation continues to cool, the big question now is whether the Federal Reserve will ease rates and whether the relief will trickle down to consumer fast enough. For now, the economy is showing signs of balance, but it's still walking a tightrope. For more updates on inflation, interest rates, and the US economy, follow and subscribe.